Hey, what's going on, everybody? We are live. I'm here with Madeline, and we're going to switch it up today. We are going to talk about what your accountant should know when you need financing. All right. And I will tell you, I have seen the difference in people getting approved sometimes is their accountant. So you guys need to listen to everything we're going over. All right. Madeline, what's up?
What is up?
All right.
Well,
So,
actually, can I show one thing?
yeah, I, that's awesome. Send me a pair.
Yeah.
I like it.
Basically, the official uniform of Profit Panda at this point.
I dig it.
All right, let's get serious. Let's talk about
Oh,
finance.
I love it. All right. So let's talk about a couple things here, right? Like I know how involved you are with your clients, but most other people don't. And so what are some of the things that you try to prep them for when they need financing?
Yeah. So the first thing is that we need to know that you even want financing
Hmm.
because everything comes down to what I call a financial why. So, whenever you are talking about managing money, money is just a tool, it's a utility. We need to know how we're going to be using it.
Hmm.
So, if we're using your business, or if we're, and like the intended outcome is to save money on taxes, it's
Hmm.
going to be a whole different strategy than I'm looking to grow scale and I might need to get access to capital in order to make that happen. Same thing if you're looking to purchase a vehicle or a personal residence. We're going to take all of that into consideration. So, oftentimes, when I have a new client that is working with us, I want to know what their plan is over the next 2 years,
Hmm.
the next 5 years. And then that's really going to help us narrow down where we should be kind of guiding them from a financial perspective is like, where is it that you're wanting to go? So that way you don't roadblock yourself, or we don't do too good of a job and then keep you from your next opportunity.
I love it. I love it. What are some of the things? I mean, how often should an accountant be updating the books and honestly all the financials, because one of the biggest things that I see, and this is for 15 years, is people lose out on equipment or people lose out on SBA or something because they don't have everything situated. And I
Yeah.
mean financials, AR, AP. Talk about that.
Yeah. So I think that there's a big misconception that it's like, oh, I'm small, so I just aggregate all my stuff at the end of the year and I give it to my tax accountant.
Which
And
is 99% what people do.
100%, like, yes, literally, I would argue to say almost 100%. And the problem with that is like, you're small, which is exactly why you should be looking at this now, because you're never going to get to that next level in a healthy way without learning a lot of hard mistakes. If you're not being disciplined today, like if
Mhm.
you can't manage your first 500,000, how are you going to manage your first 5 million?
Yep.
So I think at a bare minimum, I don't care if you don't even, I have some clients that don't even have revenue and they're still doing their books on a monthly basis. So at bare minimum, you should be going in and managing your finances monthly. Profit Panda, we like doing it weekly,
Mhm.
depending on the engagement. But aggregating everything and doing it annually and just crossing your fingers and hoping and praying that it works out for you, probably you're going to miss out on not only profit opportunities, but also potential financing opportunities.
Correct. Do you think it's a good idea to write everything down basically to zero like most people do?
It depends on what your what outcome it is that you're looking for.
Mm.
If you're wanting to
Well,
get qualified for literally anything, no, because it looks like you're broke,
mhm.
and you are
And
broke.
yeah, on paper, yes, absolutely.
Yeah.
So when would it be okay to do that? Okay, write everything down to zero. And in your opinion, when do you need to play it straight?
Yeah, so I think like if we get it down to zero, I only want to see it get down to zero if there's something outside of the financial statements, or let's say the P&L, that's making it zero.
Hmm.
So the reason why we like working with construction and home service is because you might be a very profitable, healthy business, but you are getting to this net zero amount through depreciation. So if you're depreciating assets, machinery, things that are actually assets, right? Not just liabilities, you're
Hmm.
going to get the same outcome that you want of paying potentially less in taxes, but also you're not necessarily pulling yourself out of the game when it comes to trying to unlock capital.
Got it. And so if you were, let's say we have a client here that wants financing or is thinking about selling their business,
Yeah.
can you explain why they absolutely must have the strongest financials and returns possible?
Sure. I mean, it's going to be like oftentimes your valuation is dependent on how profitable you are.
Mhm.
A common word that people throw out there is like, what is your EBITDA? Which is
Mhm.
just a fancy of way of saying, how much money do I make before these other off the books? I mean, I call them off the books, but these other tax adjustments like depreciation, amortization, interest. You can also throw in owner's compensation, or like
Mhm.
if you're running your lifestyle through the business. But ultimately, like the more healthy that you are on paper, the more attractive that you are to a prospective buyer. And so making sure that, we're filing your taxes, we're showing that audit trail, we're showing that average daily banking balance of something that's healthy, you're going to be able to leverage better deals in the event that you do go to market.
Absolutely, absolutely. So that's crucial. I like that. And now let's talk about why they should use depreciation, owner salary, and some of these other things to bring down the taxes, and how. And then I'll come into play with how it actually impacts lending, because that's really why you would do it that way.
Yeah, sometimes I like to actually put this like on an Excel format, and we like actually benchmark it out, but
Mhm.
kind of in a rough, like a just conversational way. When it comes to saving money on taxes, a deduction is not necessarily a dollar for dollar value back to you. So a lot of times, like there's a joke that goes around where it's like, I'm gonna go and I'm gonna go on this trip or hire this, accountant, whatever it is, it's a write off.
Yep.
Okay, that's cool. It is a write-off, but just because you pay me, let's say $1,000, doesn't mean that you're getting $1,000 off on your taxes. When you start playing with tax credits or when you get into depreciation, you either will get dollar for dollar returns on your taxes without impacting your profitability or net income.
Mhm.
Or if we're talking about depreciation, sometimes you can get even more than a dollar for dollar. And that's when we start talking about like accelerated depreciation. We're not going to go down that rabbit hole today.
Okay.
But in a nutshell, if you think about if I were to come to you, Jonathan, and purchase a vehicle that's over 6,000 pounds for $80,000, and it cost me $15,000 a year in actual monthly payments, I'm
Mhm.
able to reap these large depreciation benefits in exchange for $15,000 in payments.
Yep.
So this is when you start to get your money working for you and having capital work for you
Yep.
instead of getting to 1231 and having to get your checking account down to $0 because you're just trying to, rack up as many expenses as you can in the middle of dead winter.
Yep. Prepaying rent. Not that
No,
not not
no,
that I've ever done that before. Um,
don't do that.
yeah, I know. We all do it. But here's the reality of it, though. The reason why those methods are so important is because when it does come time for lending or a business valuation, they are added back into the mix, and you
Yeah,
actually get credit for them. And what that means is, yeah, you're not paying that much in taxes, but you can still go out and borrow what you need to borrow, and your business is still very, very valuable when someone does an evaluation of it. All right, and so that's crucial. Now, one I have to touch on profit first.
all right.
All right, so a lot of people like this program. I think it's completely trash, but I do understand what it does and why people love it.
Yeah, I
Okay,
have a love-hate relationship myself.
yes, and so let's talk about why does profit first kind of suck, and then how do we go about making it not suck?
Okay. Profit first is like how to manage my finances for dummies, right? It's the Dave Ramsey method of business finance. Like, we don't have envelopes in business. So instead, let's open a bunch of checking accounts and put money into them. And then, yeah, there's principles about it that I like because
Yes.
some of us we get into the mix of business and money just disappears. We've all been there. I get it. So yeah, I like having a high interest savings account to hold money back in to get me through winter. I like the idea of, you know, I mean, that's actually where it kind of ends. I like having a
Yeah.
high interest savings account, but I want to keep the bulk of my cash in my, my main checking account, which oftentimes if you're splitting up too much, then it
Mhm.
does have impacts on the finances, which actually you taught me, because guess what? As awesome as Profit Panda is, we are still learning too. And there was a situation where we had a client who needed to get approved, and Jonathan had to jump through a bunch of hoops because they were on the Profit First method, and it did potentially disqualify from a lot of options.
Yeah.
So we immediately made that switch, and I'll let you get into the
I
rest.
love it. All right. So here's why, and this is important. Every underwriter wants to underwrite the income account. Okay. The income account is just where all the money comes into. All right. And in Profit First, you're told to zero that out essentially and send it to all these other 7 accounts. Well, first off, if you're at a bank that charges you per account, you're getting, it costs a lot of money over time to run your business the way Profit First wants you to. Second, when you're zeroing that out, one of the things they're looking for is average daily balances. How much cash do you keep? And you should be keeping 10% of whatever your monthly sales average is in order to get approved for whatever you want. And that goes for equipment, a line of credit. It shows good cash management. The other part of that is they do look at beginning and ending balances, right? Because most of the time that's when a payment's going to come out. And if they're low, it doesn't seem like that person can actually make the payment. So if you want to use Profit First, do it, but keep 10% of your monthly sales average in the income account at all times, no exceptions.
Yeah.
That's the workaround, guys.
Yeah, and I don't like totally hate on Profit First. We actually do a version of it at Profit Panda, but we do it in a Google sheet.
Yep.
So essentially, we'll take that banking balance, and that's all aggregated with your Profit First account, and we will split it out. And sometimes there will be that save for winter, that hold account. But that instead of doing the traditional income account, that's going to be their main operating account where most of the money is held. And then we'll do a percentage of weekly collections into other accounts, but we're not draining it. And all of your detail, that breaks down the bank account is on this week-to-week tracking. So you can get the data without destroying your, financing capabilities.
I love it. What questions haven't I asked you that I should right now?
Let's see. I would say, like, if I have a client who's coming to me and is looking for financing, make sure that your taxes are filed and on time.
Yep.
Focusing, and depending on the client, sometimes this isn't a deal breaker, but debt to income.
Yep.
Building your business and personal credit, which we've talked about countless on some of these lives, but that is relevant.
Always.
Strong financial statements, and find a good accountant.
There you go. It will make your life much, much, much easier.
Yeah.
Awesome. Well, listen, you guys heard it here. Madeline, thank you so much. Guys, if you need an accountant, you need financing, reach out to us. We're here to help. We help people all over the country. That's all we do. So reach out. Appreciate you guys. Madeline, keep crushing it.
See ya.